$400 million vanished overnight. A thriving Canadian tech company, once celebrated as the next big thing in innovation, now stands in chaos. Employees arrive at the office to find an eerie silence. Empty boardrooms, and blinking server lights that seem to mock the turmoil inside. The CFO, the very person entrusted with the company's financial lifeblood, is nowhere to be found. His office cleared, his accounts in disarray, and his trail seemingly erased. How could someone so trusted orchestrate a disappearance of this magnitude? How could billions, entrusted to one individual, vanish without warning? Tonight, we dive deep into the shocking story of betrayal, greed, and the vital lessons every investor must know. Canada's tech scene was buzzing with excitement. This startup, headquartered in Toronto, promised to revolutionize the industry with innovative solutions and cutting-edge technology. Investors poured millions into the company. Driven by bold projections and ambitious promises, the boardroom was filled with brilliant minds, and the office seemed to hum with energy and potential. At the center of it all was the CFO, man admired for his intelligence, precision, and apparent integrity. Colleagues trusted him implicitly. He was the guardian of the company's finances, the gatekeeper of billions of dollars in investment, and the face of credibility for stakeholders. Everyone believed he had the company's best interests at heart. On the surface, everything appeared flawless. Quarterly reports were delivered on time, profits seemed steady, and the company's stock price climbed steadily. The CEO praised the CFO for his discipline, the employees looked up to him as a role model, and the board trusted his judgment implicitly. Yet, beneath this polished exterior, a silent storm was brewing. Few knew that while the office lights burned late into the night, the CFO had begun orchestrating a web of secret transactions. Offshore accounts, shell corporations, and hidden transfers formed a hidden financial labyrinth designed to move money away from the company without anyone noticing. It was subtle, meticulous, and invisible to those who trusted him the most. Meanwhile, the team of accountants, auditors, and finance managers believed the company's financials were airtight. They reviewed spreadsheets, reconciled transactions, and signed off on reports, unaware that the numbers were carefully manipulated. Every ledger seemed accurate, every document official, and yet the truth was far more sinister. Investors, too, were blinded by success. The allure of impressive growth and the promise of returns overshadowed the need for scrutiny. Meetings were held, presentations were polished, and the CFO's reputation as a flawless operator reinforced everyone's confidence. No one suspected that in the shadows, millions were quietly siphoned away, building a fortune that did not belong to him. And then, the first whispers of irregularities began to appear. Small discrepancies, unusual transfers, and delayed reports raised eyebrows, but by the time anyone considered raising concerns, the CFO had already set the stage for the ultimate betrayal. What started as subtle manipulation would soon escalate into one of the most shocking corporate heists in Canadian history. By the end of this period, the company stood at the brink of chaos, with billions at risk and trust eroded, and the question loomed over every investor, every employee, and every board member: how could someone so central, so trusted, orchestrate a crime of this magnitude right under their noses? The first signs of trouble didn't come as an explosion. They were whispers, subtle and almost imperceptible. It began with minor discrepancies in the company's financial statements. An accountant noticed a transfer that didn't match any invoice. A payment was recorded twice, yet only one service was delivered. The numbers were small, almost insignificant in isolation, but they were enough to plant the first seeds of doubt. At first, these discrepancies were dismissed. After all, mistakes happen. Payroll errors, delayed reimbursements, or misfiled invoices were common in a company of this size. Yet, as the days passed, the irregularities grew. Transfers to foreign accounts appeared more frequently. Tiny sums accumulated into millions, and the pattern suggested something far more deliberate than human error. The CFO remained a picture of composure. His office lights burned late, as though he was the first to spot the problem, but no one suspected that he was the architect of it. To the employees, the anomalies were nothing more than administrative blips. To the board, they were minor oversights, but behind the polished reports and confident meetings, a silent game of deception was unfolding. Investigators would later describe it as a masterclass in misdirection. Every transaction had a paper trail, every ledger could be explained, and yet, each one was a carefully constructed illusion. The CFO had built a maze of digital entries and shell accounts that shielded his activities from scrutiny. It was clever, precise, and nearly impossible to detect for anyone who didn't know what to look for. Meanwhile, the company's auditors began to notice irregularities in timing and frequency. Large sums were moved just before reporting deadlines, and small inconsistencies in reconciliation processes became more pronounced. Questions were raised quietly in internal meetings. But the CFO's reputation as a meticulous, trustworthy leader discouraged further probing. Everyone assumed he had a valid explanation after all. No one wanted to challenge the genius who controlled billions of dollars. Employees began to whisper. A junior accountant mentioned missing receipts. An operations manager noted unusual vendor payments. Suspicion started to ripple through the ranks. But no one could connect the dots. Each piece of the puzzle seemed isolated, innocent, and easily dismissed. The company continued to thrive externally, while internally, trust was starting to erode, almost invisibly. Then came the first unmistakable red flag. A transfer of several $1 million to an offshore account raised alarm bells. Unlike the earlier minor discrepancies, this was significant. Emails were exchanged, meetings were called, and nervous glances were shared among the finance team. Questions were raised to the CFO. But his calm explanations and authoritative presence deflected concern to the outside observer. He remained untouchable, confident, composed, and in complete control. Yet the tension was building. The subtle cracks in the company's financial foundation were widening, and the first wave of doubt had begun to infect the minds of those who had once trusted him implicitly. Everyone began to wonder, had they been blind? Had they missed the signs? How could someone so trusted manipulate billions right under their noses? By the end of this period, the initial signs of deception had escalated from minor anomalies to serious irregularities. The first crack had formed. A fracture in the company's carefully constructed facade. And although no one yet understood the full scope of the betrayal, the pieces were beginning to align, hinting at the catastrophic storm that was about to hit. No one suspected the extent of what the CFO had been hiding. Beneath the surface of meticulously balanced books and glowing reports lay a labyrinth of deception. Offshore accounts, shell corporations, and untraceable digital wallets had quietly accumulated millions over months. It was as if an invisible hand had been draining the company's fortune while the office buzzed with ordinary activity. The CFO's strategy was genius in its subtlety. Every transfer was carefully masked as operational costs, vendor payments, or intercompany allocations. Every large sum that moved offshore had a plausible explanation documented in spreadsheets. Only a trained eye or someone who knew the pattern could detect that something was deeply wrong. To anyone else, it looked like flawless financial management. The real shock, however, was his network. A web of shell companies spanned multiple countries: Canada, the Cayman Islands, Switzerland, and the Netherlands. Each entity had its own bank accounts, directors, and legitimate-looking business operations. Money would flow from the company to one shell, then to another, and then into private accounts controlled solely by the CFO. It was a sophisticated financial maze designed to confuse even the most diligent auditors. Internally, he maintained his charm and authority. Meetings with employees and board members were punctuated with confident explanations, carefully rehearsed presentations, and meticulous reports. He projected absolute control. Those around him saw only the polished exterior, brilliant CFO, ensuring the company's growth. No one imagined that behind every confident statement, billions were slipping silently out of the company's hands. Late nights in his office became the routine, though no one knew what he was doing. Files were downloaded, emails sent to untraceable accounts, and financial models updated to conceal the missing money. Each action was precise and deliberate, a step in a carefully orchestrated heist that would eventually reach hundreds of millions. Meanwhile, auditors and accountants continued their work, oblivious to the manipulation. The digital trail was obscured by layers of misdirection, multiple small transfers rather than one large sum, intercompany transactions designed to appear normal, and invoices with legitimate-looking vendors that were nothing more than shell operations. The CFO had anticipated every possible check, every review, and every question. He had created a fortress around his secret. By this point, the company's financial health appeared stronger than ever. Public statements showed profits, growth, and stability. Investors remained confident. Employees continued their work, and aware of the ticking time bomb inside the company's balance sheet. But the first cracks were already visible to those paying close attention. Small anomalies hinted at a much larger scheme, though no one could yet see the full picture. And then came the first whisper of a name, a previously unnoticed offshore account, linked indirectly to a shell company. The trail was faint, buried in hundreds of transactions. To most, it was insignificant, but for those who began to look closer, it was the first glimpse of the massive deception that had been quietly in progress for months. The CFO's secret was not just about money, it was about power, control, and the ability to manipulate trust. Every board member, every employee, every investor had been lulled into believing in his integrity, and yet, in the shadows, he had quietly built a personal empire at the expense of the company and everyone who trusted him. By the end of this period, the CFO had set the stage for the ultimate betrayal. The web of offshore accounts and shell companies ensured that the money could vanish almost instantly. And though no one realized it yet, the company was standing on the edge of a catastrophic revelation, one that would shake the Canadian tech world and teach every investor a lesson they would never forget. By the time the first anomalies were discovered, the company's leadership realized that this was no ordinary mistake. Internal auditors were brought in, and independent forensic accountants were hired to examine every transaction, every ledger, and every offshore account. The atmosphere inside the company had changed. Whispers of distrust spread like wildfire. Employees glanced at one another with suspicion, wondering who could be responsible for what was quickly being recognized as a massive financial betrayal. The investigation began quietly but methodically. Forensic teams combed through years of financial statements, emails, and bank transfers. Each transaction was scrutinized, and every discrepancy was traced as far as possible. What started as a small internal audit quickly turned into a full-scale probe involving multiple jurisdictions. The scope was enormous. Money had been moved across borders, through shell corporations, and into accounts designed to be untraceable. Every discovery added a new layer of complexity and intrigue. As investigators dug deeper, they uncovered patterns that had gone unnoticed by internal staff. Large sums were being funneled in small increments to avoid detection. Transactions were structured with precision, often routed through multiple intermediaries to disguise their final destination. The CFO's ingenuity was undeniable, but so too was the audacity of his deception. What had initially seemed like minor errors now appeared as a carefully orchestrated plan to siphon hundreds of millions from the company. Media attention began to surface as rumors leaked. Analysts, investors, and journalists in Canada started asking questions. The company issued vague statements assuring stakeholders that everything was under control. But the tension was palpable. Investors feared the worst, employees worried about their jobs, and the board began to question how such a massive betrayal could have occurred under their noses. The first breakthrough came when a single digital trail was followed back to an offshore account in the Cayman Islands. It was a tiny clue, almost negligible, but it confirmed suspicions that the CFO had been diverting funds systematically. From there, investigators began connecting the dots, a network of shell companies, transfers through Switzerland and the Netherlands, and a labyrinthine series of financial maneuvers designed to hide the true beneficiary, the CFO himself. Interviews were conducted with employees who had interacted with the CFO directly. Some recalled unusual requests or unexplained transfers, while others remembered subtle pressures to approve documents without full review. Then, investigators began piecing together a timeline, months of transactions, carefully disguised as legitimate business expenses, had been slowly siphoning money away from the company. By now, the scale of the fraud became apparent. Hundreds of millions of dollars had been moved, leaving a gaping hole in the company's finances. The once thriving tech startup now faced the very real threat of collapse. Every auditor, investigator, and board member understood that the consequences would be catastrophic, not just financially, but in terms of reputation, trust, and future investment. And yet, the CFO remained elusive. He maintained a composed exterior, attending meetings and communicating with employees as if nothing were wrong. To outsiders, he was the same trusted executive, calm and confident, but the investigators knew better. The evidence pointed to a man who had meticulously planned a financial empire for himself, while leaving chaos in his wake. As the investigation progressed, the company realized that uncovering the full truth would take time, expertise, and persistence. Every discovery led to more questions. How much money had actually been stolen? Were there accomplices? Could the funds be recovered? Each unanswered question added to the suspense, leaving everyone involved on edge, waiting for the moment when the full scope of the CFO's deception would finally be revealed. By the end of this period, the stage was set for a dramatic confrontation. The investigation had only just begun, yet it already exposed the audacity, intelligence, and sheer scale of the CFO's crime. And for everyone watching, the investors, the employees, and the public, the question remained: how could someone so trusted, so central to the company's success, orchestrate such a staggering betrayal without anyone noticing until it was almost too late? The tension reached a breaking point when, seemingly overnight, the CFO disappeared. One morning, employees arrived to find that his office was empty, personal items gone, and his corporate devices, laptops, phones, encrypted drives missing. No forwarding address, no explanation, just an eerie silence that hung over the company like a storm cloud. It was as if he had vanished into thin air, taking hundreds of millions with him. Panic swept through the boardroom. Executives scrambled to contact him, but every phone call went unanswered. Emails bounced back, assistants had no information, and even family members reported no recent contact. The magnitude of the situation began to sink in. The CFO hadn't just embezzled money, he had vanished. In a calculated disappearance designed to leave chaos in his wake. Authorities were immediately notified. Canadian law enforcement, financial crime units, and cybercrime specialists became involved. The case quickly escalated into a national-level investigation. But even with the full force of these agencies, tracing the CFO proved almost impossible. His careful planning, knowledge of digital banking, offshore jurisdictions, and shell companies made him a ghost in the system. Every lead seemed to hit a dead end. Meanwhile, the company was left reeling. Share prices plummeted, investor confidence shattered, and employees feared the collapse of the very organization they had helped build. Each day brought new headlines in Canadian media. Tech CFO disappears with $400 million. Investors shocked by sudden fraud. Who knew? The CFO behind the empire vanishes. The public fascination grew, and so did the pressure on the company's remaining leadership. Inside the company, the sense of betrayal was palpable. Employees who had trusted the CFO, admired his expertise, or depended on his guidance now felt a mixture of shock, anger, and fear. Meetings were tense, emails were filled with urgent requests for clarification, and every financial decision was scrutinized. The shadow of the missing CFO hung over every department. Investigators began reconstructing his steps leading up to the disappearance. Travel records, financial withdrawals, and digital footprints hinted that the CFO had left the country, possibly using multiple identities and carefully timed transactions. He had anticipated the investigation even before it began, ensuring that by the time auditors discovered the discrepancies, he would already be gone. Every new discovery made the story even more staggering. Digital traces led to unregistered accounts, hidden safe deposit boxes, and offshore corporations specifically designed to obscure ownership. The deeper investigators delved, the more sophisticated the scheme appeared. It was clear that this was not a simple embezzlement, it was a meticulously planned financial vanishing act, executed by someone who understood the vulnerabilities of corporate systems better than anyone else. As authorities continued to piece together the puzzle, A chilling realization emerged. The CFO had not only stolen money but had also exploited the trust and goodwill of hundreds of employees, investors, and business partners. The betrayal was personal and professional, leaving scars that would take years to heal. For the public and the company alike, the biggest question remained unanswered: where was he now? And could any of the stolen $400 million ever be recovered? The mystery gripped the nation. Investors feared contagion in other tech companies, and the story became a cautionary tale for the business world. One man's ambition had created a drama that no one could ignore. By the end of this period, the CFO had become a legend of deceit, a ghost haunting the corridors of Canadian finance, a symbol of how trust can be exploited and wealth stolen in a blink. For anyone watching the story unfold, the lesson was clear. Even the most trusted executive could hide a secret so massive that it could topple a company, ruin investors, and vanish without a trace. News of the CFO's disappearance and the missing $400 million spread like wildfire. Headlines dominated business news in Canada and across North America. Investors, analysts, and the public were stunned. Social media platforms exploded with speculation, criticism, and conspiracy theories. How could this happen in a trusted tech company? Who knew about this before it happened? Every tweet, post, and news segment added fuel to the growing fire of outrage and fear. Investors who had poured millions into the company were now facing staggering losses. Retirement funds, venture capital investments, and institutional holdings all hung in the balance. Many of the company's largest stakeholders demanded immediate answers. Emergency meetings were held in boardrooms across the country, while legal teams scrambled to understand the implications and explore options for recovering the stolen money. Employees inside the company felt a mix of disbelief, anger, and anxiety. Some had unknowingly signed off on documents or approved transactions now linked to the embezzlement. Others felt guilt for trusting someone who had meticulously deceived them. Productivity declined, tensions escalated, and the company's reputation began to unravel in real time. Every internal communication was scrutinized for hidden clues, while rumors circulated about potential accomplices or overlooked warnings. The media seized on every detail. Financial news channels broadcasted rolling coverage, showing stock charts crashing and analysts speculating about the company's future. Journalists interviewed former employees, investors, and industry experts, all highlighting the gravity of the fraud. Headlines screamed, $400 million vanishes overnight. Investors in shock. And Canada's biggest tech betrayal, the CFO had become a symbol of corporate greed and deception overnight. Lawmakers and regulators also entered the fray. Questions were raised in parliamentary committees about corporate oversight, auditing procedures, and investor protections. The scandal quickly became a case study in how trust, when combined with opportunity and ambition, can lead to catastrophic consequences. Regulatory bodies in Canada began reviewing compliance protocols across the tech sector, sending a ripple of fear throughout similar companies. Amidst the chaos, investors demanded accountability. Shareholders threatened lawsuits, class action suits were drafted, and financial advisors warned of potential contagion across the industry. For many, the CFO's disappearance was a wake-up call, a stark reminder that even the most sophisticated companies could be vulnerable to deception from within. Meanwhile, analysts worked tirelessly to quantify the financial impact. Reports detailed the missing $400-1, outlining how the funds had been siphoned through offshore accounts, shell companies, and complex financial instruments. The numbers alone were staggering, but the story behind them, the betrayal of trust, the meticulous planning, the disappearance of a key executive captured the public's imagination far more powerfully than any statistic ever could. For ordinary Canadians watching the news, the scandal was more than a corporate story. It became a lesson in vigilance, due diligence, and skepticism. Families wondered whether their own investments were secure. Business students analyzed the CFO's methods as cautionary examples. Financial advisors emphasized the importance of audits, oversight, and constant monitoring. The CFO's crime had become a national lesson, one that would be studied and debated for years to come. By the end of this period, the company faced not only financial ruin but a complete crisis of credibility. Investors were shaken, employees demoralized, and the public outraged. The story had escalated beyond a single corporate scandal. It had become a cautionary tale of ambition, greed, and the fragility of trust. And while the CFO remained missing, his actions had left an indelible mark on everyone connected to the company and the wider financial world. As the chaos unfolded, investigators began piecing together subtle traces that the CFO had left behind. At first, these were minor irregularities in usual wire transfers, odd invoice patterns, and discrepancies in financial reports. Analysts who had once trusted the numbers were now combing through every line of data, looking for inconsistencies that might reveal the CFO's path. Every seemingly insignificant transaction became a potential breadcrumb leading to the truth. Digital forensics teams worked tirelessly. Encrypted emails, anonymized digital wallets, and offshore account activity slowly revealed a pattern. The CFO had anticipated scrutiny, carefully covering his tracks, but no plan is perfect. Tiny mistakes, a timestamp here, a forgotten metadata tag there, began to emerge, and each one brought investigators a step closer. It became clear that this was not just a disappearance, it was a carefully orchestrated trail meant to mislead and confuse, and unraveling it required patience, precision, and creativity. Meanwhile, auditors discovered connections between the company's funds and multiple shell companies scattered across jurisdictions. Some of these entities were dormant, while others were active, conducting seemingly legitimate transactions. With the help of financial intelligence units, investigators traced the movement of millions through layers of corporations, accounts, and intermediaries. The deeper they dug, the more intricate the CFO's web appeared, almost like a spider weaving a trap that had ensnared everyone who came near it. Tips from whistleblowers and anonymous sources further complicated the picture. Former employees who had sensed something unusual months before began sharing confidential information with investigators. These accounts revealed a pattern of meticulous planning, with the CFO ensuring that only he understood the full scope of his operations. Every secret meeting, off-site financial review, and digital maneuver had been part of a larger scheme designed to hide billions. Simultaneously, investigators noticed inconsistencies in travel records. The CFO had been moving internationally under multiple aliases, attending meetings, and creating the illusion of business continuity while siphoning funds. Every flight, hotel check-in, and digital footprint revealed a deliberate strategy: move quickly, stay untraceable, and maintain the appearance of legitimacy. It was a game of cat and mouse. But the investigators were slowly closing in. Financial analysts working with the investigative team began mapping the connections between the stolen funds and various high RPM industries: tech startups, cryptocurrency exchanges, real estate ventures, and even luxury investments. The CFO's theft had not only devastated his company but also rippled through sectors that relied on trust and rapid capital flows. Each connection uncovered highlighted both the audacity and sophistication of his plan. Despite the mounting clues, the story retained its suspense. Every lead seemed promising yet fraught with dead ends. Investigators had to separate the CFO's deliberate misdirections from actual evidence. Every phone, record, email, and financial transfer became part of an intricate puzzle, revealing both the brilliance and the danger of a mind that had spent months orchestrating this vanishing act. As the section closes, the audience sees the first real breakthroughs. A series of linked accounts and subtle digital footprints begins to point toward possible locations, alliances, and accomplices. The tension builds while the CFO remains physically absent. His financial and digital shadows cannot escape the relentless pursuit of investigators. The stage is set for a dramatic confrontation, revelations, and lessons that every entrepreneur, investor, and corporate leader will remember.